to help out the family and so on.
Well, and also many young couples, and even in the business arena, term insurance is used, so that helps to really buffer the cost of the life insurance. It's not that huge expensive amount of premium. My thinking on it is if you believe you're going to need the insurance for long term, your lifetime, then it's appropriate to look at a more permanent form of life insurance, something other than term insurance. If it is something that you think is a shorter need, such as getting my children through college,
yes,
you are going to be able to get much more death benefit to your family if you have the term insurance for the premium dollar.
Right. So we'll go a little bit into these different types of life insurance in a little bit. All right. Well, when can a life insurance benefit actually be taxable income?
Okay, there's a couple of times that I have seen it be taxable income, and that is primarily when the transfer for value rules are not followed properly. And one big example of this is if a company owns a policy on an individual and decides to transfer ownership of that policy to a shareholder, that makes the death benefit taxable. If the shareholder had applied for the insurance from the onset, there is not a problem. It's just transferring it from a corporation to a shareholder is what's called transfer for value, and that will create an income taxable event. And I did work with a group that had that happen to them. I did not write the insurance coverage, but it was in place that way, and it ended up being income taxable. And that's not fun. I mean, the whole unique design to life insurance is that it's not income taxable. The other thing, or the death benefit is not income taxable. The other time that I have seen problems with income tax situations on life insurance is when there are huge loans against the policies and the policy lapses and the individual is still alive.
Right.
If the insurance company calculates that that policy is in a gain position at lapse, whatever that gain is taxable at ordinary income tax rates. Life insurance is not privileged to have capital gain rates. Anything relative to life insurance is at ordinary income tax rates.
Right. So it's kind of a killer when it happens.
It is.
And there are a lot of people that have been getting into some financial difficulty, or some of them, again, people are viewing their life insurance policies as like a big savings account. And so they were drawing against these cash values and a substantial amount.
Right.
And then suddenly, well, we had this big market drop
Right.
recently, and so suddenly the cash value wasn't there to support the loans, and now the life insurance company, well, first of all, they're going to be asking for that next premium to
Right.
keep the policy in place. If the person can't pay the premium, then there's a problem.
In particular, this comes into play with whole life insurance. Universal life is a hybrid between term insurance and whole life insurance. On the whole life side, you can only take a loan from the policy, and precisely what you're saying, it can happen. You can end up having loaned so much money out of the contract that there's no way for it to continue to make a loan and pay the premium, and it can become a taxable event depending upon if the policy is in a gain position. So that's something when I'm auditing people's policies I take a look at. Also, we advise our clients to be sure to know what your advisor's biases are. And I make this clear to the clients that I'm working with that I do believe in life insurance. I think it's a wonderful, wonderful tool. And I think it's a death benefit tool. I do not typically put together life insurance packages to do anything but be a death benefit.
Right, because again, there are many people that were promoting them basically as a tax-free savings account again.
Correct.
And if the idea was as long as you didn't take it until you passed away, well, yeah,
Yeah.
then it would be tax-free. But if you do it during your lifetime and you have this type of a situation, that some people are actually facing now because they just don't have the money.
Yes, I've worked with a client to get them out of this type of a situation. Fortunately, everybody was still alive, and yes, they did pay some tax, but not anywhere near what could have happened if the person had died and let that loan continue and continue. So.
Now, I heard that there's a way that you can sort of, in some cases, it may not work for everybody, but you may have somebody that's close to this position, and if they're concerned they're getting to that point that they can just sort of convert the policy to like a paid up policy.
Yes, you can convert it to what is called a reduced paid up contract. However, you still will have to, if the policy is in a taxable place and you do take reduced paid up, there will be a certain portion of that that will become taxable. And that's all an internal calculation that's done by the insurance company. And typically this is with older contracts that have fairly significant loans against them. And even though they have a loan against them, they're in a gain position.
Yeah. So part of what we're dealing with here is that, and I'm sorry folks, it's getting a little esoteric, but there are surrender charges related to this, and so you can avoid the surrender charge by doing this conversion that we're talking about.
Well, and the surrender charges are more applicable to universal life policies. And when I'm working with clients and they say, gee, I want to just surrender the policy, and I see that they still have like a $20,000 or $30,000 surrender charge, I work with them not to surrender the contract. Possibly we reduce the face amount up to a level that's acceptable both by the insurance company, by the client, and also by the life insurance laws that are in place.
Okay. Let's try to move on a little bit.
Okay.
Maybe something a little more down to earth.
All right.
Are all life insurance companies the same?
Absolutely not. One thing I think all of us learned in this downturn is no company is too big to fail. And we saw things with a big company, AIG, that no one ever thought would have the issues and the problems that they had. I get it was appropriate for the government to come in and take care of AIG. Insurance companies are state regulated. If AIG had failed, I don't know how all the states would have worked together to help all the policyholders with their issues. So it was well to have that preserved. But I do an analysis of the insurance companies that I work with. I have a software that's called Vital Signs that gives me ratings from Standard & Poor's, Moody's, AM Best, and a number of other different rating services to tell me how well the company is doing.
Now, when life insurance companies, I guess we could say fail, or whatever, I mean, I've seen some companies go away that I was astounded to see. I mean, we talked about like Fidelity, mutual life insurance company. I don't know if it was mutual by the time that it failed. Do they have something a little bit like the banks do, where another company sort of comes in and takes over?
Typically, the industry has been very benevolent. When an insurance company is having a problem and it goes into conservatorship or receivership, the traditional thing that has happened is other life insurance companies will assist that company. This last issue that we had with AIG was a total different ballgame.
Well, they were just too big.
They were too big. But there are also state reserve programs. The state of California has a reserve program for $250,000 death benefit. Now, right now with the state of California and the conditions that it is in, I don't know how that reserve program would work.
Yeah.
We haven't had to tap that. I hope we don't have to tap that, but that would be interesting to see how that would play out if the economic environment got that bad.
Yeah. Okay, some life insurance, I've had life insurance agents in the past. Now, my past may be a little further back than would be relevant for today, so forgive me for that. But anyway, I know that life insurance agents sometimes provide illustrations to demonstrate the benefits of the policies. How much can you rely on those illustrations?